So in today's video, I wanted to talk about two things, and that's market conditions as well as market tendencies. It is important to understand that the markets move in cycles. Sometimes it's going to be trending, sometimes it's going to be consolidating, sometimes it's just going to be moving normally and efficient from one place to another. And just like the market has certain tendencies and each asset has certain tendencies, every strategy has certain tendencies as well, and every strategy has conditions where it works extremely well and conditions where it doesn't work quite as well. And by understanding this, we can adapt to the different conditions, the different tendencies, despite what kind of conditions the market is in. Now the problem is, and the problem with most traders, is they think just their strategy alone, just their candle pattern alone is going to get them through every single market condition, when in reality it probably only works in one of those conditions. Now what do I mean by this? Someone picks up a strategy that works really good in consolidation. I remember back in the day, I actually had this trading bot that was really good in consolidation. And when the market was consolidating, it would take wins, it would pass challenges, etc., etc. The strategy that bot was running was optimal for a strict consolidating market. Now, what happened as soon as that market came out of consolidation, we started making all-time highs, we started trending. Well, guess what, guys? That strategy stopped working as well. I actually started to lose. I started to blow accounts. I started to give back a lot of the profit that I made from when the market was consolidating. And at the time, I didn't know that that's actually what happened. I just thought, oh, this thing stopped working or the strategy doesn't work. I just got lucky. And that's what most traders do as well. As soon as their strategy stops working, as soon as they run into market conditions where things look a bit confusing, they start to really doubt that strategy and they start to question whether or not they really had an edge in the first place. And 99% of the time, it's never the fact that the strategy changed. It's never the fact that the market changed. They simply didn't adapt to the change in market conditions that has just happened. And I ran into this as well after I switched to a strategy that worked in trending markets. When the market was making higher highs, higher lows, or lower highs and lower lows, the strategy worked amazing. As soon as the market started to consolidate, started to get into tight ranges, the strategy didn't work as well. Started taking losses, started getting stopped out. A lot of the moves ended up stopping short and coming back on me. But this time, I knew exactly how to adapt. I knew the market is consolidating. So those TPs that I used to get for 3R, 4R, 5 plus R, I can now probably not count on the fact that it's going to run that far. I should probably play it a little safer and use a 1 to 2, a 1 to 2.5, something on the safer side, because I recognize the fact that the market tightened up. When the market's consolidating, we're not trending very strongly, the moves the market makes are going to be smaller, and those moves are also going to have a lot more retracement, a lot more back and forth. It's going to take a bit longer to get to where price ultimately wants to go. So I recognized this, made the adjustment right away, and I was able to still make profit, and most importantly, I was able to protect the profit that I had made previously when the market was in ideal conditions for my setup. So the most important part is being able to recognize it, guys. The problem is a lot of people recognize it too late. They do one day, they keep getting stopped out. They do a whole week, they keep getting stopped out, and then they just think everything's broken. They never think to adapt. They just want to fight the market. They get frustrated, they start revenge trading. They never take a step back to go, wait a minute, why was the market just moving 100 points last week, but this week it's only moving in increments of 20 to 30 points? Why was the market making huge trending displacements last week, but this week we're just staying inside of the range? Why is the daily time frame not looking as obvious and it's getting bunched up, but last week it was super clear and I got to the market and got an easy bias every day? Maybe I should adjust, or maybe I should fight the market and revenge trade and think that's going to help me. But that's what most traders do, guys. They just chalk it up to, the strategy stopped working, market sucks, cool, I'm going to Hail Mary it, and then they end up getting wrecked and they get back on the same ride again. They go up and then market conditions change, they go back down, they blame it on strategy, blame it on the market, and they're right back in the same exact cycle over and over and over again. Maybe sometimes they manage to get a payout through the cycle, but despite that, they eventually end up spending that back in eval fees when market conditions change and they start trying to fight the market again. And it just doesn't make any sense, guys, because if it's raining outside, right? If it's raining raining outside, if it's snowing outside, why would I go outside in swim trunks? Why would I go outside in a bathing suit? And just like if it's sunny, if it's 100 degrees outside, why would I go out wearing a ski jacket and a parka and some ski goggles? It just doesn't make any sense. It's the wrong conditions, it's the wrong climate for the wrong approach. So you have to adjust, you have to adapt to the conditions, to the climate of the market as well. And this is the part that nobody talks about, because this is also the place that most people give up and they just resort to selling courses, or they give up on trading and go back to working a normal job. But 99% of people do not make it to this stage where they can actually recognize and discern market conditions and then adapt accordingly. A lot of them recognize it, but not a lot of them can adapt to it. Some of them can't even recognize that, and that's the number one problem, guys. And that's also the first skill you should work on building. The first skill you should work on building whenever you're taking on a new strategy or taking on a new approach is understanding what conditions the strategy works best in, which ones it doesn't, and how to recognize when those conditions are among you and when those conditions are not. And then the second thing is establishing rules for those scenarios. When the market's consolidating, maybe your TPs don't run as far, so now your TPs are closer, 1 to 2 instead of 1 to 4, 1 to 4 instead of 1 to 8. Whatever it is for you, make sure you're adjusting accordingly. Maybe you usually risk 500 per trade, but because you don't feel as confident or as comfortable, now you risk 250. Automatically, you're going to save yourself a ton of stress, and you're also going to prevent yourself tilting if the worst case scenario happens. So all of these are ways that you can adapt your strategy to the market, guys. And the last part is tendencies. Seasonal tendencies, end of year tendencies, beginning of year tendencies, even certain tendencies the market has during certain news events or during certain news weeks leading up to those events. Couple of them right off the top: FOMC day, the day before FOMC day, the day before NFP day. Take a look at your daily chart on the last 10 of those days, guys. The last 10 days that landed before NFP, the last 10 days of FOMC, and the day before FOMC. I guarantee you at least 8 out of 10 of those days were just pure consolidation or a very small range. So if you're trading a strategy that works well in trending markets, you should probably just avoid those days entirely. And this is the type of experience, recognizing tendencies, adapting to conditions, that allows you to avoid 99% of the fuckery in the market. 99% of the days where you're going to be fighting it, 99% of the days where you just should not be in there altogether. Work on this skill, adapting your strategy, recognizing conditions, recognizing tendencies. Strategy alone doesn't make you profitable. Ability to adapt your strategy over time is what leads to long-term consistent profitability. So take with this what you will, guys. Appreciate you watching the video. Comment down below if you learned something, and we will see you in the next video.